welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Let's take a look at some of the stories now we're tracking for you in the BNN Bloomberg newsroom. Mining are edging higher today. The miner says it is exploring an initial public offering of its North American gold assets. This is up 1.64%. Now, if it goes ahead, the spinoff would be anchored by Barrick Mines in Nevada and the Dominican Republic, and Barrick would retain a majority interest in the new entity. The move comes amid reports Barrick is being pressured by investors to shake things up. Bloomberg News is reporting BHF offered around $53 billion US in its now declined attempt to acquire Anglo American. The commodities giant made an offer mostly of stock, but also a cash component. Anglo American ultimately rejected the offer after a planned acquisition of Canada's Teck Resources. There were also concerns over a longer regulatory approval process with BHP. Energy Minister Tim Hodgson says Canada is willing to negotiate with other provinces beyond Alberta on lifting clean electricity rules if they have similar policies. Prime Minister Mark Carney suspended the rules for Alberta after signing a deal to create a new pipeline to the BC coast on the condition that the province adopt a stronger industrial carbon pricing regime. And taking a look at the markets after a lovely little stretch of positive days. Right now, it's off about 0.5%, and it is a similar situation as we start the month of December down in the U.S. as well. You can see everybody's in the red right now. S&P 500 off by 0.28, Dow Jones down by 0.45, NASDAQ down by 0.3. They finished November up slightly to continue their monthly runs. Markets had a bit of a shaky open with the NASDAQ leading the decline. Cryptocurrencies skidding as well. For more on why investors were displeased and if this will be the sentiment for the rest of December, we were joined earlier by Brian Vendig, Chief Investment Officer at MJP Wealth Advisors.
Investors are hedging a little bit after a strong week last week, and all eyes are on next week's Fed rate decision, and we have some inflation numbers coming out on Friday for the month of September. I think at the end of the day, though, when you look back at the companies that have reported so far for Q3 earnings, they've definitely exceeded analysts' expectations with year-over-year growth of about 13%, with expectations going into the quarter around 8 to 9%. I think right now, when we look at, some deleveraging coming out of crypto, yen, interest rates going up actually in Japan, affecting, currency. I mean, today's just a day, I think we're taking a little bit of profits coming off of a strong week last week.
You think it is a time to consider owning more dividend-paying stocks?
Well, I mean, I don't think the AI investment trade is completely a bust. I think there is concerns about valuation and CapEx spending. Can this continue at these levels next year? And I think that the spending will probably moderate, but I still think there's productivity gains and societal benefits that AI is going to play out, which will help companies' profits and bottom lines. But opportunities do exist because of earnings growth and expansion of multiples in areas outside of tech. We see those in outlooks for 2026. So looking at mid-cap stocks, value, dividend-oriented stocks, as you mentioned, Andrew, as well as I think, within that dividend complex, healthcare, industrials, financials are some areas to keep an eye on.
Are you talking Canada or the States here?
Well, I think generally speaking, domestic and international on that value side make a lot of sense. If you look at Canada specifically, let's talk about commodity-based businesses. I think that's a good uplift when considering changes in currency valuation. I think financial sector overall for the North American continent is an opportunity with a steepening yield curve. But when you look at valuations, international equities do present an opportunity, especially if you believe that U.S. dollar strength would moderate or be benign over the course of 26. So it all comes back to earnings at the end of the day. We're not foreseeing a recession next year. The Fed's moving more neutral, and those are things that help to support equity valuations.
What is your feeling on oil and energy right now?
Well, I think right now, on an overall basis for oil, it feels like there's a little bit of a supply glut, a little bit more supply than demand. But when you look at outlooks for energy requirements over the balance of this decade, there's still a strong demand for all types of energy, oil being included. So do we expect prices to really spike up in the oil complex over the next 12 months or so? Not really, but do we expect that there's a demand for electricity and other sources of energy inputs into the supply chain? Absolutely. When you think about some of the investments that are happening in the infrastructure as well as the electrification space in supporting AI innovation.
And one type of stock that you are interested in owning is the big software security stocks. And not necessarily Palo Alto Networks, I know, but names like that anyway.
Yeah, I think, software's been in a penalty box, over the course of this year. And recently, in the last couple of weeks, we've seen a pullback in cybersecurity. And I think, over the course of next year, there's going to be more and more demand as things continue to be built out in the AI innovation trend, that software is going to necessarily, and cybersecurity has to be part of that equation. Plus, with so many different cybersecurity and software offerings that are out there, we expect that in a lower interest rate environment, there's probably going to be an uptick in M&A, which might also be quite beneficial for shareholders.
And he was speaking with Brian Vendig, Chief Investment Officer at MJP Wealth Advisors. Up next, Barrick Mining is exploring an initial public offering of its North American gold assets. We'll dig into that and the intrigue right after the break. Well, there's the possibility of major changes coming in the way for Barrick, with the gold giant announcing it's exploring an initial public offering of its North American gold assets. For more on this, we're joined by BNN Bloomberg's Lindsay Biscaya. Lindsay, thanks for joining us. An interesting move. Get the good things separated from some of the more challenging things.
Exactly. And analysts, a lot of Bloomberg analysts are saying this could actually be worth $60 billion,
wow.
More than $60 billion, about $62 billion. So right now, the company's board has given approval for management to explore this possibility, this idea of an IPO of its North American gold assets. As you say, the safer, more lucrative side of the business for Barrick Mining. So if this does go ahead, the subsidiary called Newco would be anchored by Barrick's mines in Nevada and the Dominican Republic. These are the two more lucrative gold mines that we're talking about.
Stable gold mines.
Stable gold mines, exactly. And Barrick would retain a majority interest in that spinoff. So that's important for shareholders to know. So management now exploring the measures through early 2026. We're actually expected to get an update in February, so not too long from now. But of course, if this were to be something management would want to pursue, that would still require board approval. But it's definitely a first step in a company that's been in the headlines a lot recently.
Yeah, people like Barrick. They like some of the companies that Barrick owns.
They like some of the companies, some of the mines in particular that Barrick owns as well. And it's interesting because Barrick hasn't been doing as well as some of its peers when it comes to that gold rush and getting some benefits from that gold rush. Barrick hasn't been doing as well, but apparently a lot of the mines Barrick owns, especially this one in Nevada, could be incredibly lucrative and have the interest of many. So Elliott Management, we were talking about this a couple weeks ago. There's reports Elliott Management has built a big stake in Barrick and was pushing the company to maybe split into two. We know Newmont has studied a deal to gain control of Barrick's Nevada mine. So these are that big gold discovery in Nevada, the 4 Mile project. And so we've also heard of rumblings within the company to split into two and really make that North American side more lucrative. So it's going to be interesting to see what exactly happens. But this has been in the news a lot in terms of kind of splitting these into two and really looking at these North American assets and what could be best use to kind of move them forward and unlock a lot of that value.
And now you mentioned off the top analysts. What are other analysts saying about this?
Most analysts say that this is a positive idea. Bloomberg analysts say this spinoff could be worth, as I mentioned, more than about $62 billion. Should investors assign the spinoff premium, they say, similar to Agnico Eagle's multiple. And we also spoke to Colin Shazinski of Wealth Management, talking about why this is so significant and just how much value this could unlock, this potential IPO. Here's more on what he had to say.
A lot of Barrick's problems and things that had kind of weighed on the stock prior to the last few months when all the changes started were international, and they've always had this core jewel of the Nevada mines that are very, very, very stable and have been producing for decades. But the company's valuation has depended a lot on the ups and downs of political and operational risks in other countries.
So we're also hearing from the National Bank of Canada saying this essentially packages up the best sides of Barrick Mining, that it's likely to become an acquisition for Newmont. Of course, a lot of people looking at Newmont wondering what the company's thinking about this. But the primary concern for the National Bank of Canada is the IPO would be an anticipated lower multiple with limited free cash flow. So there are some concerns there. But in the long run, National Bank of Canada also keeping their rating at an overperform for Barrick.
Okay. We'll leave it there. Lindsay, thanks as always. Lots more to come on that.
Yeah.
BNN Bloomberg's Lindsay Biscaya. Now, up after the break, we'll get an in-depth look into how successful Black Friday shopping was for Canadians. That's next. Let's take a look at some of the market movers today, and we're joined now by Bloomberg Equities reporter Monique Molema. Monique, thanks as always for joining us. Canadian Solar making some moves.
Hi, yes, thanks for having me. So Canadian Solar, their shares are up this morning after the company announced that they're going to be moving a number of their assets over to North America. They're a Canadian company, but a fair amount of their assets are currently in China, whether that's their manufacturing or one of their subunits, CSI Solar. And they've had some concerns recently because the U.S. has gotten more strict around what the U.S. deems foreign entities of concern, which includes China, around importing assets from those countries and doing trade with those companies that operate there. So as a result, Canadian Solar announced that they're going to be reshoring a number of their manufacturing over to North America. They're going to be taking over control of some of these Chinese assets, and they're going to be forming a joint venture with CSI Solar. And this is what's really helping their shares today. They had some deadlines that they need to meet by the end of the year for complying with the U.S.'s rules around foreign entities of concern, and this is going to help them get on their way to do that.
All right. And Strategy Inc. Making some moves as well, stockpiling a little bit.
Yes, so Strategy, formerly known as MicroStrategy, their shares are down this morning. They've really been struggling recently, their share price, because a big part of their business is just buying and holding Bitcoin. And Bitcoin prices have been really pressured. We saw Bitcoin fall below 85,000 today compared to earlier this year, it was at $126,000. So that's really been weighing on shares. And the company's CEO also said on a podcast Friday that they would consider selling their Bitcoin holdings if their premium fell below 1. So MicroStrategy used to have a premium that in terms of its market value compared to its Bitcoin holdings of over 2.5 times multiple. And already it's fallen to about 1.2. So they're now saying if it gets even lower, they could consider selling their cryptocurrency, which is something the company had never considered before, and is giving some investors a bit of pause of how bullish they really should be about Bitcoin. And MicroStrategy is also seen some movement today because they made an announcement that they have created a $1.4 billion reserve fund. They have a number of interest payments and dividends that have to be regularly paid out. And there were some investor concerns that if the company's Bitcoin premiums fell or if their Bitcoin holdings fell, then they might not be able to meet those obligations. So now with this fund in place, there's at least a little more sense of security that these payments will happen.
Okay, Monique, thank you for that. BNN Bloomberg's Monique Molema. Well, as we approach the holiday season, many are seeking out the best deals. A new report shows that Black Friday sales in Canada grew 6% this year as Canadian consumers saw the best discount rates worldwide. That's according to a new report by Salesforce. Let's get the latest Black Friday data from Kayla Schwartz, Director of Consumer Insights at Salesforce. Kayla, thank you very much for joining us.
Thanks for having me.
How did the overall numbers look when it came to Canadians doing a little Black Friday shopping?
The numbers were incredibly strong. 6% growth in the Canadian market overall. And even over the weekend, sales accelerated 9% over last Cyber Weekend. Really strong performance. But what we're hearing from our customers and what we're seeing in the consumer market is a ton of use and just a pivot to using AI tools to help shoppers find the best deals, find the right products. And here at Salesforce, Agentforce, we're helping our customers reach their shoppers in brand new ways this holiday season.
How are they using it? Is this agentic then that consumers are now starting to use as well?
Yeah, there's a few different ways that we are seeing shoppers use these tools this year. The first is with discovery, shoppers leaning into third-party agentic search like ChatGPT and Perplexity to help them find new products and new brands. And the second way is on brand-owned shopper agents on their websites, chatting with an agent, helping them find new products and ultimately purchase those products. In fact, we saw that for retailers investing in agents this holiday, they're growing their holiday sales so far about 7 times faster than the industry. So a ton of activity and interest. And then finally, within customer service, more and more consumers are leaning into agentic customer service to get those busy holiday season questions answered.
Now, and I'm just looking at the numbers, and I did really quick math. 173 million of the sales were influenced by AI and digital. Of the 865 million, that's about 15% roughly, give or take. How does that compare to previous years?
It's definitely a growth. We've been seeing the role of AI in the holiday shopping journey increase every single year. But now with all of these new agentic tools in market, that influence is growing even faster. And so this year is definitely a record breaker.
And with just looking at social and mobile, social is down slightly, but is that a continuing trend?
Social, I think that is an anomaly. There's, again, a lot of new tools out in market like these AI tools. In fact, the Canadian consumer was one of the fastest adopters of these AI tools around the world, even compared to the US market. So we're seeing Canadian shoppers lean into new tools in favor of, over tools like social, but social is still an incredibly important and large channel in the Canadian market.
And now an interesting number, I don't know if this is concerning or this is people, maybe they're offering some great deals when they do this, but the buy now, pay later share was up from 2.8 to 5.1. Is that people trying to get the money together as they go, or were there some good deals offered?
There were some amazing deals. In fact, the Canadian shopper saw the best holiday season discounts out of anyone worldwide. So if you're shopping this weekend, you're definitely saving. But yes, we did see a much greater usage of those buy now, pay later tools, which suggests that the Canadian consumer was leaning into alternative forms of payment to help finance their holiday shopping.
And what other ways are they paying now? How are they finding ways to pay?
Yeah, mobile wallet usage was up too. So think tools like Apple Pay, PayPal, Samsung Pay, all of those payment options that you can use from your phone to help make it easier to buy. In fact, we've seen an increase in the rate of purchases this week in Canada happening over a mobile phone. So the convenience factor of shopping online on your phone, but also transacting through these tools grew this week.
Okay, Kayla, thank you very much for joining us.
Thank you.
Kayla Schwartz is Director of Consumer Insights at Salesforce. Coming up, Barrick Mining is exploring an initial public offering of its North American gold assets. More on that next. One of the biggest names in Quebec business has requested a special meeting of Transat holders. Financière Outremont, a firm held by Pierre Pelletot, is calling for the board to be reduced to 6 directors and nominate 3 new members. There have been calls for a restructuring of the company and for an initiation of review. Pelletot holds investments of about 9.5% economic and voting interest in Transat. Shares of London Mining are moving lower. The Supreme Court of Canada has ruled that investors can sue the Vancouver-based miner for failing to disclose a rock slide that took place at one of its mines in Chile. The company took about a month to report the incident and cut its 2018 outlook for production at the location by 20%. The announcement caused London stock to fall sharply, losing more than $1 billion in market cap. Shares of Synopsys are trading higher today. AI chip leader NVIDIA is investing more than $2 billion in the semiconductor design software company. NVIDIA has invested billions of dollars this year in companies linked to the booming AI industry, ranging from deals that include more than $100 billion in investment in ChatGPT parent OpenAI to a $500 billion stake in Intel. And looking at the markets right now, you can see the rally looks like it may end today. Had a probably 5-6 day run, and November end actually up across the board. But right now, the TSX is off by about a half point, and south of the border, similar situation unfolding. All the markets are down. S&P 500 off by 0.37, Dow Jones down by 0.5, and Nasdaq off by about 0.46. Barrick Mining has announced an evaluation of an IPO of a subsidiary that will hold Barrick's premier North American gold assets. Newco would be anchored by Barrick's joint venture interests in Nevada Gold Mines and Pueblo Viejo, as well as Barrick's wholly owned 4 Mile gold discovery in Nevada. For more, we were joined by Colin Scherzinski, the chief market strategist at SIA Wealth Management.
They're talking about spinning off a minority interest to the public in the North American mines, and that's fairly significant because a lot of Barrick's problems and things that had kind of weighed on the stock prior to the last few months when all the changes started were international, and they've always had this core jewel of the Nevada mines that are very, very, very stable and have been producing for decades, but the company's valuation has depended a lot on the ups and downs of political and operational risks in other countries.
Yeah, it's Pakistan comes up here, and National Bank says that one concern here could be the actual valuation on the rump of the company, Africa, and then this giant Pakistan mine that's going to be swallowing up cash as they build it out.
It's true, and so that's why I think what it seems like they're trying to do is to kind of unlock some of the value in the North American operations, and then who knows what they're going to do with it, right? After that, are they going to use that to potentially shore up some of their international operations? It kind of remains to be seen at this point in time what they would do with the capital they raised from this spinoff.
The banks are beginning to report this week. What are you looking out for here, Colin?
The banks have been really strong lately. They've been showing really great relative strength relative to other stocks in the Canadian market. So what I'm looking for from the banks this time is we've had a pretty good period in the stock market. So you would think that the capital markets and the wealth management divisions have the potential to do well. And at the same time, on the banking side, we'd like to know, well, how is the Canadian economy? How is the U.S. economy? The Canadian GDP report that came out last Friday was spectacular. So hopefully that would turn into positive results for the banks. We'll see what's coming from them. So things we'd want to watch for is the headline results, comments on the economy. What do they do with their loan loss provisions? That's always a big one with banks. Are they lower than previous, or are they higher than previous, or what are they doing with those? That's always a big tell on what the banks are thinking going forward. And do any of them raise dividends? This is their fiscal year end as well.
Right, and the banks, of course, famous for their big dividends. And One thing that's interesting to me, the bank stocks are down today. They did hit a record high, as you know, on Friday. But then these non-bank lenders, such as EQB and Propel and GoEasy, have seen major pressure on their shares.
Yes, and it's that's probably related to questions about how strong is the Canadian economy, because the non-bank lenders might feel it more at the margins than or they might get impacted first relative to the big banks, which are, well, they're just so big, and they're in diversified and into so many different businesses. Do
you always have to own some Canadian banks if you're a Canadian fund manager? Pretty well, Colin.
Yeah, I mean, if you want to be able to try and keep up with the index when the banks are doing well, if you don't own banks, it's really hard to keep up because they're such a significant part of the index. So to a certain extent, yes, I mean, that as an investor, and particularly institutional investors, it is important to at least have some banks at any given point in time, just for benchmarking purposes. There's certainly room to go off from that. There's certainly room to run concentrated portfolios, but even then, it's a matter with the banks of when they're doing well, then there's a point where they need to be owned. And I'll say in our relative strength rankings right now, we have seen the banks climbing up to the top. They are dominating to a point that we really haven't seen in quite some time. They're usually kind of an upper middle kind of group, but now they're actually right up at the top, which is quite interesting heading into this earnings season.
Is there a case to be made that, the past doesn't necessarily point to the future with any accuracy, but over the years, if you just had all your money in Canadian banks, you would have done just fine.
Yeah, to a certain extent, yes. I mean, the banks have their ups and downs like any other sector, but in Canada in particular, we have the issue of the resource stocks are extremely volatile, and they're a big chunk of the index. So there are times when the resource stocks can drive up the index, can drive down the index, and the banks are kind of this stable group within the middle of all of that. That yes, they have their ups and downs, but not to the extent that some of the other sectors do.
I'm just looking here at a calculation of if you had just put all your money in bank stocks at the end of the last century, Colin. Wow, I can't believe this. According to my Bloomberg screen, you would have had a return of 2,000%, whereas just putting your money in the TSX Composite would have been a bit more than 600%. So 2,000% versus 630%. Incredible how the banks have done well. And as you know, they tend to earn higher profit margins, or at least return on equity, on their Canadian business.
That is true. I mean, they're in such a dominant position in Canada that they do. They're in everything. I mean, they're lending to all the companies, all individuals, homeowners. They have credit cards. They have insurance. I mean, they're they literally, as I say, they kind of in a lot of ways almost they are a reflection of the Canadian economy because they have a finger in every pie.
The government made noises in the budget about stepping up competition in the sector. I think we probably shouldn't hold our breath. They have such great lobbying power, for one thing.
It's hard to say. I mean, who knows what they're actually going to do over time? And even if they did, it would take a certain amount of time. Even if they did opened up Canada today, it would take a certain amount of time for anybody to come in and make a meaningful inroads, just because they have such a dominant position in the market right now.
Yeah, although apparently the banks, I'm sure they're paying attention to the rise of these financial apps. I noticed that a Royal Bank ad not so long ago poked at a finance app, mocking it. I'm sure they're worried that these apps may ultimately take younger customers away.
It's hard to say. I mean, anything is possible. The question is how much. I mean, it's at the end of the day, it seems like just about anything you want to do, you're going to have to do through one of the big banks. You might be able to do certain things with other providers, but at the end of the day, you're pretty much tied to the banks in this country.
And he was speaking to Colin Trzynski, the Chief Market Strategist at SIA Wealth Management. Well, we're seeing a sharp sell-off in cryptocurrencies this morning. We'll get more on the effect on the overall market when we come back. Programming note for you. Know Your Options is back. Tune in Wednesday at 3 p.m. Eastern to have all of your options trading questions answered by Chris Tom of Moat Financial. Send us your questions at knowyouroptions@bnnbloomberg.ca. Well, we've been seeing a sharp decline in cryptocurrencies this morning, bringing fresh momentum to a wide-ranging sell-off that appears to have settled in. For more, we were joined earlier by Mike Philbrook, CEO at Resolve Asset Management, to discuss his reasoning for that sell-off.
It's more micro market structure related. If you look at the action of Bitcoin and Ethereum thus far today, what you're seeing is that crypto trades on a 24/7 calendar. So it trades on UCT, or Coordinated Universal Time. And if you look at that, what you saw is the sell-off start last night at about 7 p.m. That's when the books are the thinnest, the liquidity is the lowest, and it's also, in fact, where we tick from November to December. And so when you're looking at that, you've got a lot of quantitative funds and some traditional funds that are going to be repositioning their books. And most quantitative price-based systems are going to be looking at adjusting those positions as we turn from 1 month to the next. And so you saw this sort of hitting of the books, probably people deleveraging a little bit, taking some of the leverage off. We had a little bit excess leverage coming into December 1st. And so you're seeing some adjustments of that starting at 7 p.m. last night. And of course, those North American managers are also going to be looking at that month turn to adjust their books. And so that unwind sort of cascades into some thin liquidity. And that's what's created the vertical drop at this point. And we should expect probably that to continue throughout the day as North American quant strategies adjust their positioning as well. So really it's month end, a holiday week, the weekend, thin liquidity equals a bit of a reflexive cascade, but that's not anything changing on the macro environment.
Right, that's interesting. You said that we could see this selling continue for a bit, Mike. Why is that?
Well, as when you think about last night at 7 p.m., all of those books, let's say you're a quantitative trader and you're trading on some monthly system that says, oh, I've got to reduce my exposure because price is down. I'm trading under some sort of moving average. For a simple example, those positions have to be taken off. They started last night with Asian managers as the calendar ticked. And now you've got those North American managers that will be following similar types of systems. And so they're going to be adjusting their positioning during the day today. It could last into tomorrow too. We could see, some testing of the lows potentially. You could even see a breach of the lows. But again, Bitcoin and Ethereum continue to be financialized at the institutional level. If you look at the news from the last month, Texas acquired $10 million of Bitcoin for their sovereign state reserve. A half a dozen states have set up the same sorts of infrastructure to do so. New Hampshire added some structure for having a $100 million bond backed by Bitcoin. So you're seeing the institutional financialization continue to move down a path of adoption. And so we're going to have these types of reflexive price actions. And the way I would interpret it, it's not a macro failure. Rather, it's a bit of a structural reset coming into month end to clean out the excess leverage that's been built up. And historically, these events, after clearing the leverage, make room for the next leg up in the trend.
You're a keen observer of the ETF market. There have been, I know, over the past few weeks, pretty big redemptions in some of the crypto ETFs. Has that been a factor in the weakness, do you think?
I think so. And as you're seeing that retail sort of give up on the trade a little bit, you're seeing the institutional adoption. And as we talked about, even in the summer, as we saw the Clarity Act and the Genius Act and the clarity around regulation with respect to digital assets owned by institutions, their main stumbling block was we didn't have regulatory clarity. Once they had that, those firms operate in meetings that happen over months and quarters. And what you've seen is them lay the path in order for them to adopt the asset class. So that part of the base trend, the secular trend, is moving in the right direction. And what we've seen is a clean out of a lot of things that are retail oriented, whether you look at that heavy AI trade, those things that have worked really, really well in the summertime have been unwinding a little bit. And that's pretty healthy. You make money by accumulating these assets when they're in a bit of a drawdown rather than trying to buy and FOMO into them as they're running up. So this is an opportunity for those who don't have exposure to these assets to start to build some exposure or rebalance that exposure back up to where it was. And I would say you have to remember that these assets are high beta assets. They have high volatility, so make sure your position sizing is right. Use a crawl, walk, run strategy. Start small, build some profits, add a little bit more. When you've got a little bit of profitability, add a little bit more. Think about it in the context of your overall portfolio.
And I mean, it's very hard to generalize about a thing like this, but what about crypto and tech stocks? Is it a similar audience, do you think? Obviously, some investors in common. So when they get wary of risk, are both asset classes likely to come under pressure?
Well, we've seen that in the past. We've seen that recently, this very high correlation between those NASDAQ tech high beta stocks and Bitcoin and Ethereum. So your point is bang on, but that is non-stationary, and non-stationary is a fancy word for saying it moves around. Sometimes it is very correlated, sometimes it's not. In the tariff tantrum sell-off, we saw Bitcoin actually hold in much better than we saw stocks hold in. So those correlations do move around a little bit, and I think some of this is a reflexive echo of the October 10th liquidation event that happened in digital assets, which was pretty massive. It was bigger than what happened at the FTX situation. So again, I would say this is the opportunity to start to look at accumulating and getting some positions in the portfolio, rebalancing those positions for long-term investors looking to incorporate these assets into their portfolio. They have reached the $1 trillion level. These are significant assets. And the other thing is we are seeing gold and silver continue to rise dramatically in very strong bull trends. That is that sort of fiat distrust. And so there is this movement to think about what's going to happen with debasement, what's going to happen with the value of the dollar. And Bitcoin often lags gold. Gold is the first mover, and then Bitcoin kicks in a little bit later. So a lot of those items are still in place. They're still fundamentally strong, and there's a macro tailwind, even though we're having this sort of microstructure in the market on a month-end rollover happen to price today.
All right, Andy was speaking with Mike Philbrook, CEO at Resolve Asset Management. Coming up, Barrick Mining is exploring the idea of launching a new IPO for North American gold assets. We'll get more after this. Barrick is exploring the launch of a new IPO that would spin off its North American gold assets. The proposal would separate Barrick's prized North American operations in Nevada and the Dominican Republic from some of its riskier assets in Africa and Pakistan, which have weighed down its stock in recent years. Here to tell us more about this and get response is Martin Pradier, equity research analyst at Veritas Investment Research. Martin, thanks as always for joining us. I guess just an initial reaction to this, any surprise?
No, I mean, we have been hearing rumors. Actually, I asked the CEO at some dinner that analysts had, and he was not in favor of this. But obviously, I think things have changed. The Elliott management position is very large, and usually, they put pressure, and this is probably a response to that.
Is that the biggest thing then, Elliott? What do they own? I think they own
like a billion.
A billion, yes.
Somewhere like that. We don't know. The board has decided this. So, this is going to move forward. I don't know exactly how did play out. But obviously, when you have a very big active investor, that puts a lot of pressure on management. And the stock has not done well for a while. And that the separation might show a better valuation for the North American part, and that might help the stock overall.
And when they say they're exploring, Does that mean that probably it's going to happen, or is it really just they're exploring it? It may fall apart. There may not be anything.
I think it will happen. I mean, I don't know, but
Yeah.
but I don't think you go out and put this kind of press release if you don't think there is a very high probability of this happening.
And fairly quickly, or will it take a while, do you think?
They said that we're going.
If it goes through, of
they're
course.
going to update us, update the market February 26 when they release the results. So I think it's it's fairly quickly. I mean, they're going to update you, and by the time they update you, it's probably they already have a plan of when this is starting trading and all that kind of stuff.
Is this really the only way they could go about it, was dividing it North American and world?
Probably. I mean, it's easier for the market value to value the North American assets higher if they are not with all the other assets, which have a much higher risk. So, yeah, I always thought that if they're going to divide, this was the kind of division that they will do, because that's where I think they can generate more value for shareholders.
And who will show interest in this? How do you see this unfolding? Who do you see the buyer, like people wanting to get in on this, on the new company?
Well, a lot of investors that will be interested in this. It's going to be a cleaner company. The only problem is the Nevada operations hasn't done well for the last 4 years. So for the last 4 years, the production was down 23% from 2020 to 2024. Costs were up 45%. You compare that, for instance, with Agnico, that cost only increased 13%. So they haven't done as well. So the priority for them is to fix Nevada, and then they can have more value. So this is probably a good way to start. But to really see the value of Barrick coming through, you have to be able to demonstrate that, Nevada is a fairly low-cost producer, as it was in the past, and it can grow.
And do you feel they can do that? Do you feel there's the
yes,
everything's in place for that to unfold?
I think there will be more focus, and hopefully they can do it. For Mill, that is, the big project. If it happens, and it probably is going to happen, it's 2029, 2030, that will reduce the cost of production a lot because it's a much higher grade. So that will reduce the cost. And you'll see more of the impact now because you don't have the rest of the operations. So on a smaller overall entity, that lower cost will show itself better.
Now, what happens with the other operations? Where does it leave that?
I mean, Barrick will be still trading, so you can buy the whole company.
But can you see people moving away from it, though, because it's now more high risk than when you had the North American operations?
I see them moving away, for instance, of Mali, where they had all these problems, and the rule of law is not very good. So if they were a buyer, I wouldn't be surprised if they move away. But the rest, they're probably going to keep it, I think.
But what about can you see investors shying away from Barrick if it's just the world operations, or will it?
Well, the way it's going to be structured is Barrick will still be trading and will still be owning the majority of this new IPO company. So the mothership is going to still be the Barrick that you know.
Yeah.
The only difference is now that you have a clear indication of what is the value of North America, and on top of that, the value of the rest. And if the value of North American rises a lot, people are going to assign more value to the overall Barrick. I think that's really what they're thinking.
And can you see Newmont maybe getting into this somehow?
Well, this is the part that Newmont will be interested. Certainly. I mean, Pueblo Viejo is a partnership, and Nevada is a partnership with Newmont. There were rumors that Newmont wanted to buy. If they were going to buy, they were probably going to just keep these assets and sort of discard the rest. So I could see them, but Barrick has control. I mean, they will IPO a minority position. They're not going to IPO the majority. So they will have control, and if they eventually reach a deal with Newmont, that's fine. I mean,
but I mean, if the offer is right, everything is for sale, though, isn't it? You think, or no?
perhaps. That time will tell. I mean, it's true. This is more attractive for Newmont to buy this new company than to buy the whole Barrick and then having to sell all the other pieces that they don't really want.
Okay, we'll have to see what happens, Martin. Thank you very much for joining us today. And that was Martin Pradier, who is, sorry, my auto cue is going on there. He is an equity research analyst at Veritas Investment Research. We've had some ghosts in the machine today, but thank you, Martin, for joining us today. Market Call is coming up next, and today on the show we'll have Michael Hanks. He's a senior portfolio manager at Murray Wealth Group, and he'll be taking your questions on U.S. and global stocks. And let's take one last look at seeing how the markets are doing right now. Before we head into the break, and a little rally looks like it might be over for the day at least. You can see the TSX off by about 0.46, a little under 0.5%. And south of the border, similar situation unfolding. Everybody is down right now. S&P off by 0.23, Dow Jones down by 0.43, and NASDAQ off by 0.25 point. And that's it for Morning Markets. Thanks for watching. We'll see you back here tomorrow.